Again, my name is Steve Vetterl. I'm your Chief Market Analyst, which just sounds ridiculously formal. I'd like to consider myself your risk manager, so let's go with that. Welcome, everyone. I know it's been tough, and for anybody that's been affected by this C-19, losing jobs, things like that, our hearts and prayers are with you. We will get past this at some point and hopefully open up a lot of the areas of the world that are shut down, especially California, which is significantly shut down. So I've been spending a lot of time on Zoom with clients and so forth. But let's talk about trading. Let's talk about software settings. Let's go through a little bit of forecast. Quick risk disclosure, if I may, please. Trading the foreign exchange markets carries a high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, levels of experience, and risk tolerance. There is a possibility you could potentially lose significant loss of your account. You should also not invest or trade any capital you cannot afford to lose, especially in this time where a lot of people are focusing on feeding their families. It's your responsibility to be aware of and understand all the risks associated with foreign exchange trading, or for that matter, any kind of trading can carry loss and complete exposure to wiping out your account. So with that being said, I want to thank everybody for joining. If you're coming in late, I am your risk manager here, hopefully to guide you through the correct settings in the software that we should utilize. I do want to throw out just a thank you to a lot of people that have posted in the many Telegram channels, especially for the trading and the software performance. If you want, you can ping me on Telegram and let me know what the settings are. I know that for those that are continuing to post positive results, you guys just be aware you cannot post the settings. I can talk about settings, especially as we begin to deviate from some of the default settings that we have. But please do not be posting any types of settings on a Facebook or Telegram. And unless you're approved, try not to get into any of those discussions, because I could tell you guys this, I have, and I'm not going to bore you with these stories today, that we can talk about them a little bit down the road, but the attorneys at the SEC, the CFTC, the NFA, FINRA, these are the four quasi and one governmental body in the US. They have attorneys that are prosecutorial types that just try and make careers out of this type of stuff. So I think it is imperative that everybody heed the warnings that Mariska, our chief compliance officer, and certainly what Sal has been talking about, because I think it's critical. I've caught a few conversations that were just really in the gray area, and I'd hate to have some attorney making his or her career chasing down Auvoria Prime subscribers and or the company. So with that being said, let's go a little bit into what my role is. For those that are new, I think it's critical as the risk manager to, obviously be your geek. I want to do a deep dive on the settings and the software in terms of the role and expectations I set for myself. I want to do a weekly recap on Tuesdays and Saturdays for the markets if time allows. Go through a few charts quickly. I'm not going to get into too much of that today, but I want to host a little bit of Q&A at the end, soliciting feedback and some polling. I know we've got some polling that, if time allows, I may reduce today. A couple of fun pictures to take a look at as well. But really the key is to have everybody understand how the settings affect their trading. I know that last week was a good week for some. It was not necessarily the best week for some. There is going to be many weeks in the course of a 52-week year that the software is going to be down. And you just have to understand that this is a long-term review. Or I should say a long-term view we should take, not looking as much of a sprint, but a view is more of a marathon. So as I will constantly try and have everybody think and act as if they were running a fund, right, in some sort of capacity. View yourself as a hedge fund manager if you want, running your statistical arbitrage account via automated software. But the important thing is from the standpoint of risk is understanding the settings. I would encourage everybody as we get into Q&A towards the end to focus a lot of your questions on understanding it better, but please do yourself a favor and don't ask me any questions that are related to, hey, I was down 3.5%. Why? Because I don't know the settings that you have. And I would encourage you, before you ask any of these questions, to please go back and view some of our previous presentations Ryan and I've done the last couple of weeks, because I promise you we've answered a lot of questions in there. But in new developments this week, before I get into, let me switch over to the Forex screen while we're at it, because we're going to talk a little about the news so you guys can get a view of that. Share that screen. So hopefully you guys are seeing that okay, which is the Forex factory calendar for the week. There we go. Okay, so May 3rd through May 8th this week, we're going to be talking a little bit about the Forex markets to give you a little bit of review. I think it's important to go over what the Federal Reserve talked about last week. As much as I know some of our foreign subscribers may not want to see me focus a lot on the U.S. markets, they've really been driving what's going on globally in terms of correlations, at least for now. So if the U.S. markets are getting beaten up or currencies related to the dollar are, it has a tendency to have sort of a wave off or a correlated effect into other areas. So this particular week, and some of the questions we got last week about the Forex calendar, you can go up into the right-hand corner and you can set the settings as I've done. I turn a lot of currencies off because I don't trade them. Certainly the argument can be made that smaller currencies can affect other ones, especially the Canadian, Australian dollars. I just decided to turn them off from the standpoint of just using news. You just click apply filter. But just looking at the news coming in. So Japan, which is a very important country, in the Bank of Japan, they are on holiday on Monday. So I expect, at least from a Japanese yen standpoint, currencies to be a little less volatile. Hopefully I'm not wrong because of the bank holiday. So the ISM is a big one, as you can see on the screen with us. Expect this number to be really rotten. Expect the ADP numbers to be really rotten. Again, this is why we're going to continue to focus on why these settings should be really conservative, because of the fact that we've got some big, bad, ugly numbers coming across. And the markets have somewhat priced in these bad numbers. If we have time, I'll show you a chart of the S&P and talk a little bit about some of the global markets. But essentially, in a nutshell, we've seen a big lift off of a really horrendous March. And April wound up being a fantastic month from the standpoint of equities lifting up due to a lot of what's taken place with the central bank. So the Fed's helium market, as we've often referred to it, not only continues, but according to portions of Powell's testimony this week, he's the U.S. Federal Reserve Chairman. I kind of got the feeling he equates a levitating market to a properly operating market. And for any concerns at the Fed regarding moral hazards of an artificially induced rising market, well, that could just sort of wait for now. So Chairman made it clear that any amount needed to keep financial systems operating was of no concern. That's important because the key thing to markets being able to trade effectively is to have proper liquidity and to destabilize and have an effective trade execution for both sides. So we've talked a lot, and you may have seen in the press what's called a stock vigilante. These are the people and funds out there that are sort of back in full force since the beginning of March. I should say, especially since the beginning of April, more recently, really just trying to pump this market back up, as we've seen almost a 600-point levitation off the bottom of the S&P. So levitating markets are interesting in and of themselves, but so much more so during a collapsing economy. So how does an S&P price to earnings ratio of 30 plus sound with an unemployment at a real plus 10, for the next 24 months? So, it's difficult from the standpoint of risk in trying to assess where we are globally in the fact that we've lifted tremendously, which has obviously lifted the dollar, which has brought some other currencies down related to that. So I think it's just important to understand all of that. So this particular week, if you note on the screen back here, you can see I'm highlighting. I've brought some British pound news in because I think it's important to, even though I don't trade the cable, I think it's important to understand what's going on in the UK. It is one of the largest economies in this country. And they're a fantastic bunch of people. Boris Johnson running the group. So with the Bank of England monetary policy report, I think that's going to be important. Ideally, and I can't say this with certainty, I don't expect anything raging out of that, but we did get some volatility in accounts on Wednesday and Thursday when the FOMC, which is the Federal Reserve, came out with comments from Chairman Powell. So I would expect some increased volatility. Can't say whether or not I'd turn the software off at this point. I probably will get a little more into what I would think I would do in Tuesday after I've seen some of the trading on Monday and Tuesday sessions finish out. So I would just say be on high alert for that. If you've had a really good week with the software, like I know some did last week, I'll switch over to my Einstein system here. So just know before I get into some of the settings here, and you sound like a broken record on this, and we're going to continue to talk like this because, I mean, guys, it is critically important that you understand how these settings affect how the software performs. I know that with a lot of people, they've been fortunate and, they've had a good couple of weeks. Again, this is all fairly new to most of us, including yours truly. So we're going to be looking for how this is operating in different market environments, but I still think it's critically important to understand at least the first top 4 in these settings. So it's everything from the profit management type down to the equity protector, which is what I'm going to talk about in my first module, which is almost finished shooting. It's just be a quick 3 minutes on going through the different settings. I'm going to go through each of these, which I will do right now as well. But I think it's critical to just understand how these can impact the account. The vast majority of people that I've talked directly with that have had problems with the software didn't understand the settings, were taking settings recommendations from fellow subscribers in either your up or down line, and they were just going with whatever, not knowing the impact. So it adversely affected the accounts in some cases, and in some cases, it did really well. So for those, I'd say congratulations on that one. But let's just start with the top one here on the profit management type. As you may know, you can double click and you can actually change that to a trailing equity. Okay, so before I do that, with just a fixed weekly goal, it's just going to go for whatever the goal is on the upside, and it'll turn the software off once you get to 3%. If you want to reset your weekly goal, you can. Actually, let me switch this over. You guys viewing the Einstein system okay? So probably had problems in the middle of the screen. You should be able to see the whole thing. Okay, cool. If you can't, just let me know. I can try to adjust it around. One of the things I really wish we could do with this VPS, the virtual private server that this is on, is actually stretch the screen out so we can view the whole thing in more of an HD widescreen, as you normally do on these large monitors I have. So just a note. But with the fixed weekly goal and the trailing equity start, the 3-2-1 that you see here, these are the default settings that come out of the box with the software. So if you just want to go for it, you don't want any protection factor, and you just want to go for a fixed weekly goal, you could set it at 3%. You can move it higher, you can move it up to 4 or 5. Just understand if it does go up to 4 or 5 or any number higher and the software does reach that, again, it will take you out of the market at that point. But if it does get up to that level and then has an adverse reaction or some poor trading on other currency pairs, as we experienced last week with a few of the yen ones, it could certainly pull that percentage right back down. So the account equity drops right back down. There's no protective factor. So if you take the fixed weekly goal, double click on it, switch down to trailing equity, this particular fixed weekly goal becomes inoperable. So it will not shut itself off in this particular case if it went up 3%. What will come into play now is the next two items below, and these are the trailing equity start percentage and the trail equity buy. Now, there's a whole chorus of different opinions on where this should be. And again, I've seen this run for now coming up on 4 weeks and a little bit of beta testing beyond that, but we still don't have a tremendous amount of data we should have in order to be able to be tweaking around with what we think the default settings should be. For now, in my discussions with the developers, these are the default settings that are the most conservative, especially with the starting lot size you see down here at 0.01. So for those running, and this is the smallest starting lot size as well. So I'm not going to get into today, which we've kind of already talked about in previous sessions of, if we change these numbers around, just know that if your account's up 1.5% for the week, as I know a few had last week, and you want to just sort of lock that in, you can actually change this number and then change the trail equity by. So you could set your goal to 1.5 in this example. You could set your trailing equity by 0.5 so that if the account did get up to 1.5%, this would trigger. Remember, it has to get to this particular point right here in order to even trigger this protective stop, as I call it, putting in place on the equity of the account. So once the trailing equity gets to your target goal, this is your trigger, you can set the trailing equity by a different number. There's lots of ways to play around with it. I could talk for an hour on this, and I kind of want to keep this webinar to 30 minutes today. So just understand that. If you're just moving down the list, and this I'll expound upon some of this in some of the modules I'm going to shoot. So I'm getting more ideas and kind of how to present this with different different scenarios and different hypothetical examples. But if you do reach your trailing equity start percentage and then your trailing equity buy percentage, sort of the protective, keep you from losing lots of performance, as I call it, for the week, we'll actually close out on Thursday. And this is essentially Thursday at 10 a.m. Eastern time. The lot size, again, this is the smallest that there is. One thing I will say, and I'm always hesitant to say this, but as we move into the months and the software continues to hopefully perform, at a 60 to 70% win rate, events around Brexit, that brought a tremendous amount of volatility into that as the as the UK was preparing to leave the European Union. So there was a lot of volatility surrounding that. There's always going to be events throughout the year. I like to call them exogenistic factors that we can't necessarily prepare for, kind of like the just tremendous impact that C-19 has had on human health on this planet. It was difficult to see factors. So the problem I have with the equity protector percentage is in the settings currently, it's at a 60. So that means that you're essentially giving the software a fairly wide net, if you will, to draw itself down by about 40% of the account. The fact that we have all the different types of settings that can be made on that, I think it is important to, if you really have some serious live money and you have not gone through a period of a demo, which I would highly suggest before you go live with any large amounts of money. Now, I'm talking about something over $5,000 or $10,000. Make sure you go through a demo. But if you want to, you can move the equity protector up to a factor of, I don't know, say 90. In which case you're granting a wide net of a 10% loss in the account. Maybe something to explore. Just kind of wanted to touch on that because I know we've gotten some notes from folks doing different types of things with these settings. But just kind of keeping it um, within this. For now, I want everybody to be really of understanding as far as the top 5 settings here. When we get into some of the deeper stuff like number of max levels, moving average period, more importantly, the position size multiplier. Remember, this software acts in sort of a martingale type of trading style where it will add trades in much larger size to a losing position. And that's similar to almost an averaging down. And the software is basically saying, well, we know we're right. We're coming up against, some sort of rubber band situation that's going to snap back against a particular trail or some sort of channel based pattern it's bouncing between. So I have seen that even though the previous versions of the software took some larger drawdowns, it always came back in many cases. Not going to say that's going to be the case going forward because we had a bunch of really big events take place towards the end of last year that really pushed the limits. And it performed very well in some of those previous versions. But, listening to this, you're probably thinking, well, Steve's basically saying, set yourselves up in a position to cast a wider net in terms of the ability for the account to draw down. I'm not really saying that. I've just seen it come back. But the problem is that why take all of that risk on the downside, especially in a larger dollar account, something maybe you can't afford to lose a lot of money in? You could certainly argue you probably should be using that money anyway, right? But ideally, you really want to just give some thought to, have I run a demo? Do I understand the settings? And we'll get more into understanding how the data shakes out as we build a larger data set with some of the MyFX books that we're attaching to this and so forth. And, I'll always solicit feedback and questions. And maybe there's something I've missed, right? I'm still somewhat new at this game. So I've seen this operate a lot, but I haven't played around a ton with the different settings because I think it's more important, at least from my sort of how my brain works, is to collect a decent data set that is to just a taste, if you will, of a little bit of the future. I've seen some pretty aggressive settings doing really well. I mean, much better than 2 or 3% a week on a smaller time frame than the daily time frame where this software is set. So I don't want to get everybody all excited about that and have them run out and change the settings, and then it just winds up having a bad week or there's some craziness in currency land. I mean, even the best algorithms that are written for some of the best high frequency trading quant-based hedge funds on this planet, like a Renaissance Capital or some of the other really top shops, that they still can have terrible months. But the beauty is that if you can stick to the settings and be conservative through the startup, and maybe the account has a good couple of months, and you've done really well, you can play around with a little bit. But outside of that, just understand that if you did 1% a week in Fundland, you'd essentially be one of the top performing funds out there. So I don't think a lot of people that are interested in sort of hitting the home runs every week even understand that. And I mean, if you take a look at Renaissance Capital's performance over the last 30 years they've been running their fund, or God forbid, George Soros's Medallion Fund, I mean, these guys have had 25 and 30% net of fees returns over 25 to 30 years, which is just bang up performance. And it has landed both of those gentlemen on the billionaires list in this country. So just to put that back into perspective, I just choose to, with a lot of questions I've got, which I'm going to open up for Q&A next, stick with the basic settings for now, especially since we get past the different central banks with a lot of their meetings and so forth coming up, and a lot of the problems that we're having with all economies and people as far as the slowdown and the lockdown that we're in. Okay, so go ahead and post some questions. I'm going to take a peek through some of these. Do know that and I don't know how it's going to shake out, but just as a little tease, if you will, I have a meeting next week with the developers, and we are going to be maybe testing out some additional settings that can help you with a particular currency. If you're running a one pair inside the account, or up to 3 pairs is what we recommend. We're going to try and maybe talk about ways to limit when the account's in drawdown on a particular currency pair that may be beating up the performance of the other 2 or 3 that are running in the account with the developer. So hopefully there's some sort of fix to kind of stop the bleeding from a drawdown situation. But you can always set your trailing equity to a very small number, so that the account does swing back from a negative return, it can sort of take itself out. So stay tuned on that. All right, so let's take a look at some questions. Please take note. Do we need to close the pairs involved in JPY since Monday is back? No, it'll still trade. I would keep that open. What to do when you're in drawdown and it's Thursday? The answer to that question is going to be difficult to answer because it would depend upon how the account's performed. If it's done really well moving into a Thursday over the past 3 weeks, depending on the drawdown, there's a lot of what ifs in answering that. And you're in, you understand the settings, you understand maybe a little bit of the movements of the market. There is a chance that you could see that maybe it's put in some recent trades, which is getting a little down in the weeds here, but you can actually see if it's beginning to perform well and come back on a positive trajectory. I would leave it run and try and get some of the drawdown back, which the software has done historically. It's just taken some time. But remember, though, key thing is run the demo. As you can see, I'm showing demos, even though I've got 2 live accounts running. And I'll show those as we get a little deeper into the data as well. All right, next question. You have your start hour at 23. I'm in the Pacific time zone, just like I am here, Mark. What hour should I put in? Also, any advantage of starting an hour after open? The only thing that's important to me is that the software is set to avoid news. That's the key. Stop trading for news right here. Yes. When to stop before news, 45 and 45, which is not default. Okay. I think default's what, 30, 15, something like that. So you can set it for, I just choose, because historically it's taken, an hour to 45 minutes to just sort of shake the craziness out that any trading pattern brings after some large red tab news event, right? All right, so let's see. Can you explain why we don't go for 10% if it even gets... Now, you can always go for that, JR. I think the important thing is that if you're swinging for the fence and you don't understand these settings, if you do, that's great. Go for it. I'm not going to stand in the way. I'm trying very hard for those that are inexperienced with the software, sort of approach this from a 5th grade level, even though probably one of my biggest weaknesses as an educator is I have a tendency to do way too deep of a dive. So bear with me if that begins to happen, but just keeping it real basic at this point. And if one can say, hey, I really understand the settings. I played around and looked at the data. I'm running demo. Go for it. At what point should I cut my losses? Are the big moves on the euro US dollar? Tough question to answer. Just broadly, you want to look obviously where the account is, if this is live versus demo. I think that one thing will probably help you guys out if you're running a demo account and you're really paying attention to, maybe you got it hooked up to myfxbook.com. And yeah, I'll do that. But if you have it hooked up to myfxbook.com, you can begin to see some of the data that's pouring through. But just take a closer look. The losses that you cut are going to be completely correlated to how much you're willing to lose. So I just, from the standpoint of a portfolio manager, which I act in the capacity for most of my week with my clients, for a client that had maybe $1 million, they would have no more than about 30 G's sitting in a live account. So that's less than 3% of their allocation. And they can have a little bit more, but until we have, a solid understanding of how everything's operating, like a year from now, I may have a different stance on that allocation. But just as an example, with a lot of my $1 million plus clients, if they're like, hey, I'm really liking the Einstein and the Alexander, I want to put an allocation into it, I'll tell them to keep it around 20 or 30 grand, maybe more than 40. All right, so let me rip through some of these other questions here. First 2 weeks of the trial, the software did a lot of hedging. I haven't seen it happen again since then. Can the developers put that back in as it helps achieve weekly target earlier in the week? I don't know the answer to that question. Okay. Yes, the default time settings can be changed to midnight GMT. Next, we'll be showing how to read the performance to understand if we should allow it to keep running in future videos. I know it's complicated, but it's also very important. Okay, so John asked this question, will you be showing us how to read the performance to understand more? Really, the bottom line in reading performance is just what has the account done? So each week, you want to know, what did it do? Was it up or was it down? And we're going to do a poll about this real soon, by the way, so I can get a feel from the and by the way, if you guys can, please, like next Saturday, tell everybody to show up next Saturday. I don't care if you have to drag them out of bed, get them out of the gym, whatever the case is, have them show up next Saturday, because I'm going to be running a poll on performance, and I want everybody's input on this. I mean, I literally want like a bazillion people at next week's event. So get the word out, because I can't. Tell your team, say, look, Steve wants everybody here next Saturday. We're going to do a poll on performance, and I want a large data set to be able to pull from. So get off my high horse here. For 100K balance, when the goal of 1.5% weekly, which is starting lot size, do you recommend? Until you understand the software, I would keep that starting lot size at no more than 0.02. So I'm highlighting it on the screen for those wondering where the lot size is. That's because that's a larger account. So, and by the way, also inside the, I put notes to this each week that also gets posted along with the video. All the notes are in here, talking a lot about the profit management type. So please make sure you take a look at, if you have accounts with less than $3 grand, talking a lot about starting lot sizes. And you're just going to consistently hear from me, the starting lot size should probably be 0.01 until you really understand what's going on with the software and the settings. Then you can play around. If you're someone that has millions of dollars, you don't have to have a 0.01, right? You could certainly set a higher starting lot size just because of the fact you have a higher net worth. But I hesitate to make that just blanket statement, because I do not want people going and saying, it was Steve told me to put it at 0.02. My account blew up. So don't be that person. Next question. Do we have the loans with level 01s? I do not understand that question. What is the acceptable drawdown percentage for your clients? That's going to completely depend upon the client's net worth, bottom line. But I can tell you this, out there in institutional trading land, drawdowns of any more than 15% are looked at negatively over a period of time. So if you're a hedge fund running a quant-based strategy, you have drawdowns over 15 or 20% in a year, that's looked at negatively. But a lot of these funds are cast a very wide net because many of them just absolutely clobbered it. And even though they've done exceptionally well, a lot of their clients, these being institutional pension funds, sovereign wealth funds, and endowments and schools, are willing to tolerate more volatility because of the fact that the particular managers, but ideally you want to keep it there. It's not hedging anymore since the first, the hedging questions come up twice here. Not sure what you guys are talking about there. Earlier you said that if the account is in drawdown on Thursday, you would need to understand if a recent trade has been made, etc., to determine if you should leave it running or cut the losses. I mean, the bottom line is the current trades that are in, if it is on a decent trajectory, essentially it's not fighting itself in loss and it's on a positive, this may not be the easiest thing to sort of go through in the beginning, but I'll get you guys more educated on as we drill down and do a deeper dive into technical analysis. But if the trade is operating in a positive manner and looks like it's with the trend, there's always a particular trend in the market, even if it's flat, right? It's still a trend. It's still bouncing in a particular range. I would keep the trade on. That may be a little have more confidence, especially if you hook it up to my FX book in how it's trading. The software can act very well in any kind of market, long or short. You guys, a lot of these questions aren't making any sense. If you have, let's say, a 10K account and you put an equity protector at 60%, then is it better to put only 4K on your account and put it at 100%? No, I would not do that, Carlo. I would set that equity, and I get it. A lot of people are like, why would I risk 40% on my account? I understand that. If it doesn't make you comfortable, you can set the equity protector factor at a higher number. Maybe put it at 80, which gives your account essentially a 20% loss potential. We'll talk more on that as we get deeper into that, because there's a lot of other things I can share in terms of observations, which are kind of limited for me on the equity protector percentage. But just as a general rule of thumb in portfolio management, you really don't want to be taking more than like 20% hits in any particular asset class. Does not use rings. So the pairs we like the most really are just the ones that are most liquid. We call it a ring. Okay, so it starts off with the euro, US dollar. Here, actually, let me just show the screen here. So to answer the question, it's the euro, US dollar. And you can move. This is the one that is the most liquid, in my opinion, especially if you look at the futures markets, which is the 6E that trades in the CME. This is one of the most liquid. So I prefer the euro US dollar. Others prefer other currencies. That's fine. I almost always prefer the instrument that is the most liquid. Why? Because it has the best data on it. And then you can look to next after that is the US dollar JPY, and then the euro JPY, sort of making like a ring, if you will, covering all the currencies around the world. Those are the three main pairs that you will always see me trading. Once I become hopefully an expert on looking at large chunks of data, I'll be able to go into other currencies down the road and look to see how they're performing. By the way, we're coming up on 40 minutes, guys. We're about 10 minutes past. Let me just get through some of these questions. I've seen the software fight a 40% drawdown. And I know that seems crazy, but I've seen it fight its way back a bunch of times in its previous versions, which had no equity protector on it. Steve, if the customer wants a hedging trade to be opened and the software doesn't with good reason, they can trigger the hedge by switching to a lower time frame, 1 hour chart or so. Let the hedging trade open and switch back to, oh boy. So that, and I'm just going to read this again. This is from Mariska. The problem with this, guys, is educating everything on switching the time frame down from charts. So that probably opens up a whole other 20 minutes. But essentially, if the customer wants a hedging trade to be opened and the software doesn't, with good reason, they can trigger the hedge by switching to a lower time frame, a 1 hour chart or so, and let the hedging trade open and switch back to day chart then. So essentially going from day to some sort of lower time frame, could be an hour, could be 15 minutes, and let it execute on that. I haven't seen that operate yet. I understand the idea behind it. I think I just a little concerned about beginning to teach subscribers how to be getting in there and messing around with the actual time frames associated with that. So I'll tell you what, why don't we do this? I'm going to make a note of that as a good question to sort of do a deeper dive on with developers and some of the top traders I'm using as our experts on this. So I'll get back to you on that. And maybe a nice process where we can just win in By the way, good questions, you guys. Keep them coming. I'm glad that they aren't like, why am I down 5%? If we are overall having better weeks than not, would it not be better to up the lot size? So overall, we'd have better gains. Or is the reason we don't is because we could get stopped out in a drawdown box? Well, I think it's a lot easier to understand the settings, let the software trade, let it begin to build account equity for you in terms of positive weekly performance. If you have gotten to that point where it's doing significantly better, maybe the account's up 20% or 30%, which is fantastic, by the way. You can begin to increase the lot size, but I would do it no more than 0.02. And please make sure this is not trading money you guys can't afford to lose, because then it becomes emotional. And at some point down the road, I'm going to give you guys a few links to some of the top trading coaches out there from a psychological standpoint, because they have tremendous blogs on how to deal with this emotionally. One of the best in the world is named Brett Steenbarger. If you're not familiar with who he is a very, very popular guy on Twitter. He has a monstrous blog. He is a professional psychological trading coach to top hedge fund traders and desk managers. The guy's really good, and he has extensive, information, all that. Right. So let's get to those questions. We're running out of time. So Sean asks, 0.01 per what account size? So Sean, I would ask you too, if you could please go into the back office of Auvoria Prime and look up all of my weekly notes, trading week notes. Towards the end of that, there is an entire discussion about account balance, currency pairs, and starting lot size. It's actually exceptionally well thought out. This was put together by a number of us with a lot of trading experience, and I think it's an excellent grid to go on to stay conservative. I can. Let me just type his name in right here. Brett Steenbarger. Hopefully everybody can see that. Google him. Guy's a man. Brett and I both started off with Market Delta, which is a software company that we did a lot of educational stuff for way back in the day. It's just analyzing the volume based, which is something I just really wish we could see in Forex, is executed volume. So we could look at it in the aggregate. It's a huge tell as to what's going on. So I have the developers looking into that. Problem is unless you are a huge Forex trader, you cannot see the volume executed unless you're one of the big 12 banks that runs it. So unless you're a huge liquidity provider in Forex execution, or one of the large banks that helps control it, you can't see the volume, which really is, I think, a travesty of trading in Forex, because aggregated volume tells you a ton about what's happening in the markets. So, okay, yeah, thank you, Claire. Appreciate that. Traderfeed.blogspot.com. Beautiful stuff. Love it. Steve, if we set the trailing equity start at 3%, the trailing equity by 1, just highlight that here. It's trailing equity start at 3%, trailing equity by 1. Is that just the same as the 3% weekly goal without the risk? In other words, if you hit the 3%, the trailing equity would only drop you back to 2%. So if you set this number here, which is at 2 to 3, it has to get to that to trigger it, right? And then if you set the equity at 1 and it drops back to 2%, trading turns off. That answers the question. Does the trailing equity start have to be hit before the software will close out the trading at Thursday, hour 14? So here's Thursday, hour 14. And the question again, sorry if you guys didn't hear this, does the trailing equity start have to be hit before the software will close out the trading at Thursday, hour 14? At any time, it means Sunday night, if the 2% is attained in upside performance in the account's equity and it drops back to 1, it could close out Sunday night, right? Monday morning. If it makes it all the way to Thursday, it's going to turn itself off, so that it essentially does not go through the full Thursday night, which is where really honestly when the volatility starts into Friday, and just the vast majority of patterns, any kind of algorithms that are traded, most of this stuff just goes bananas and just does not have good win rates. And remember, with me, everything in this data, all about win rates. Got to be in the 52 to 70% category with low risk or excellent risk management procedures to be successful long term in any trading system. All right. So we're just kind of ripping through this here, but sorry if I'm answering some of these questions half-assed, but I got a large list to move through. Drawdowns through that. Yeah, now that's true, Sean. I don't know if you've read the information we put. He said yes, but this will happen if the trailing equity starts not yet achieved. I'm not understanding your question. Thoughts on bringing position multiplier higher to make it easier for software to cost average. So the question was, you guys are throwing some good questions at me. This is great. We don't have answers for all of them, but hey, they're good questions. Thoughts on bringing position multiplier higher to make it easier for software to cost average. So here's the position multiplier here. I have not gotten into this, and I know Ryan and Tyler and some of the other global Chris directors have gotten into this. These guys have a pretty good handle on this. I've not really delved into this position multiplier. We had this set to a previous default in other versions of the software, and all it did was just bring in lots of craziness to the levels of the multiplier. So essentially, the trades keep getting larger exponentially as the software is in some sort of average down on a losing trade. And I think that the settings before the previous default settings, some may be aware of, was a bit aggressive. Again, we're going all of these settings with a super conservative, and in some cases, the minimum that we can have, especially when it comes to starting lot size, until we have a lot of data. Guys are asking great questions, fantastic stuff. I've got like 3 weeks of data to go. I mean, it's a rotten small data set, right? So we need a little bit of a broader amount of time. Some of my answers to these questions have probably changed. It is possible to use a weekly frame. I don't know how the software would operate. It was designed for a daily time frame or lower, 4 hours, 1 hour, 15 minutes. I've seen that it's done real well on 15 minutes, but the settings have to be adjusted from what you see here. So stay tuned on that further down the road. Let's see what else. All right, I'll read this from Risk. I thought this was good. The smaller the time frame, the higher the drawdown, as the data in each candle will be less accurate than in higher time frames. Historical data on previous versions of the software has shown that. So preservation of capital should always be your first objective. Okay. I think we need to bring Mariska onto this webinar, right? We'll have like a back and forth. What do you think? Is the starting lot size is changed 2.2? Is there another thing needs to be changed as well? No, I mean, Ian, the starting lot size can be adjusted upward to 0.02. It's just larger trades, right? If anything, again, this is going to depend on whether it's demo versus live, but do you understand the settings? Are you comfortable with this money you can afford to lose? All those important things from a risk management standpoint. But if you're going to adjust it up, I would first want to see how it operates with a starting lot of 0.01. And again, you notice the theme here, everybody. I'm kind of trying to dial back everybody's expectations. This is my job as your risk manager and software geek. The starting lot size is, let's go to this question. I missed, where is that question? It's actually a really good question asked about 50 questions ago. Just scroll up. A lot of these cut loss questions that everybody's asking, it's going to depend upon your situation. Just maybe using an equities analysis. In 2008, during the financial crisis, the S&P 500, that's the 500 largest companies by capitalization in the U.S., got clobbered to the tune of 47%. For those that sold at that period of time because emotions took over, it was one of the worst losses ever. You were really down, very, very stretched in a decline. A lot of people sold out because of emotion. When historically, even though things were absolutely terrible at that point, you should have probably held because the market bounced up tremendously over the next year. All right, so unless you guys have any other questions, I see 3 new ones. I'm going to go through these and we'll cut it off because we're coming up on an hour and everybody's probably getting long in the tooth on this. Once software goes into level 7, should I start panicking? That's good. Love it. All right. All right. I'm going to read this, Ryan. I haven't read through this, but I'll read this. Can you check with the developers on the trailing equity with regards to stop trading for news, please? When the EA is paused for news, I noticed that while trailing equity is triggered, the trailing goal does not get updated when the week's performance increases. During the trading pause, I had to re-trigger the trailing equity start for it to update the current goal. Basically, the trailing equity feature is rendered ineffective while the EA is paused for news. That will stop out when drawn down by trail, but not reset in a week. Okay, so I'm actually going to cut and paste this, Ryan, and I will paste this into the developers window right now. Okay, cool. All right, guys. Steve Vetterl, Risk Manager Geek. Today is May 2nd. This will be produced and uploaded and put into the back office of Auvoria Prime by all of our great experts. I want to thank everybody for attending today. A bit long in the tooth. Sorry if I've been droning on, but I think this stuff is really important for understanding of markets. Make sure to go through and read previous notes I've put in, as well as continue to post good performance on the Telegram channel, and make sure to get the word out about it next week. So make Steve happy by bringing lots of people to the presentation, right? So we could take a poll and kind of get more into deeper dive into all of this. But again, guys, thanks for the time. Federal signing off.